Good afternoon, and thanks for joining today's webinar. It's an overview of OptionsPlay. OptionsPlay, a modern tool for trading options. My name is Scott Green, Marketing Director with eOption, and shortly I'll introduce the presenter who does all of our OptionsPlay webinars, Tony Zhang. Today we'll be going over what is OptionsPlay, showing how it's integrated in your trading platform, how you can trade, analyze, and research options, showing examples, and much more. But first, just want to share this disclaimer. The types of securities, forms, and research tools used in this webinar are for demonstration purposes only and should not be considered a recommendation by Regal Securities or a solicitation or an offer to buy or sell any options. This webinar is being recorded and is not intended to be used for individual tax, legal, or investment planning advice. And speaking of the recording, yes, this will be available on our website, and we'll be emailing out a link to it soon after we wrap up today, hopefully the next day or so. So be on the lookout for that. But for those who are unfamiliar with OptionsPlay, it is, like I mentioned, integrated in your trading platform. You can find it across the top in one of the tabs for all live trading platform accounts. So if you have a paper trading platform account, you will not see the tab, but it is for live accounts. But if you do have a paper trading account, please, we'd like to show you this OptionsPlay tool. So just show you all the neat features it provides for live trading. And for paper traders, if you don't have a live account, please just, we encourage you to sign up by clicking the Open an Account button on our website and click on Live Trading, and take advantage of OptionsPlay as soon as you have your live trading account. eOption is among the leaders for low commission rates. So if you're a high volume trader, you can take advantage and save big. So without further ado, I'd like to introduce today's presenter, Tony Zhang, the Chief Strategist at OptionsPlay. Tony has 12 years experience in the financial services industry. He oversees the OptionsPlay development team that has led to the development of some of the most innovative tools in options trading and analysis. OptionsPlay is their flagship product and is currently embedded with several major sell-side brokerage firms, as well as a direct-to-consumer platform. And Tony does a lot of speaking engagements on options. He'll be at the Raymond James Advisory Conference in Houston later this month, as well as at the Traders Expo in Las Vegas in November. And also next month, he'll be at the Canadian Option Education Day. So with that being said, here is Tony Zhang.
Thank you, Scott, and thank you everyone for joining me. I'm just sharing my screen. So welcome everyone. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay. We have a pretty special webinar for you today where we're going to go over a modern tool for options trading, specifically OptionsPlay, that's integrated free of charge into your Regal Securities trading platform for those of you that have a live account. And for those of you that have a paper trading account, I encourage you to take a look at the live accounts and the low commission schedules at Regal Securities to allow you not only to take advantage of OptionsPlay, but also the benefits of options trading. And that's what I'm going to spend some time going through here for you guys today. Now, this webinar is for both new beginners who are starting out with options, who are just learning, and for those of you that are currently already power options users. We want to show you a tool that's not only going to help make the research and learning about options trading as easy and as intuitive as possible, but also for those of you that are already trading options, we really want to show you how you can utilize OptionsPlay to make your research or shave the amount of time that you research options from a few minutes down to just a few seconds and be able to execute those trades directly into your Regal Securities brokerage account. So today I'll go through a few different use cases and really walk you through all the different functionality that OptionsPlay provides you with to show you how, for beginners, how we can quickly show you where to start, and for those of you that have some experience trading, how we can make your research as efficient as possible. So the platform itself you can find in the Regal Securities platform. You see an OptionsPlay tab here in the upper right-hand corner. You can use that to launch the OptionsPlay tool, or you can always click on Add Widget and select OptionsPlay in order to add OptionsPlay to your platform. So the platform itself is divided into 3 sections. You have trade ideas and watch lists here on the left. In the middle, we have our security analysis panel, and on the right, we have trading and income. Now, first thing you might notice when we look at OptionsPlay is it looks quite different from where you typically would start if you're an options trader. This is the page that most of you are familiar with. It's an option chain. It displays every single strike, every single expiration, and you can click on individual ones to either buy or sell, and that allows you to structure different trades. However, the one thing that I want to point out is that, for those of you that are brand new, this page might be a little overwhelming in terms of understanding where should you start, which strategy is best. Then you have to pick expirations, then you have to pick strike prices, and then you have to learn what all the numbers on this screen means. And that, in my opinion, especially if you're a beginner, that can be a little overwhelming. So that's really why we wanted to create a new user experience that's a little easier to understand, a little bit more intuitive, and more importantly, provides you with starting points based on your outlook on the stock, as opposed to effectively giving you the whole phone book or throwing the phone book at you and saying, just go figure it out yourself. So that's why we created OptionsPlay. So we're going to go through a few different examples today to show you how you can utilize this tool regardless of what your views are on the underlying stock. Whether you're bullish on the stock, whether you're bearish on the stock, or maybe if you're looking for some income strategies like cover calls or cash secured puts, or even more advanced strategies like credit spreads, butterflies, and condors, we're going to go through how you can utilize our tool to structure all of these things very quickly and be able to execute those trades into your broker's platform immediately. So like I said, we're going to start off on the trade ideas and watch list section of our platform. This is designed to give you ideas and symbols to look at every day. So whether you're looking for fresh ideas under our trade ideas section, which you can filter and sort based on bullish, bearish, size of the market cap, sectors, and the different type of scans that we have, you can use this to quickly drill down into bullish and bearish ideas that are brand new for you every single day. For those of you that have existing watch lists, you can create your own watch list with a bunch of stocks that you like to follow, so that you can just simply click on a symbol and instantly see what's currently going on with that underlying stock. So that's trade ideas and watch lists. The middle panel is our security analysis panel. This is a pretty powerful tool in helping you better understand technical analysis and basically summarizing some of the major technical methodologies into two distinct indicators that give you an idea of trend and relative strength. So whatever stock you type in, we will show you the 1 month and 6 month trend that shows you whether the short and long-term trend is bullish, bearish, and neutral. This is derived from moving averages. And the key here is that we use the same moving averages day in and day out. So you get a consistent, reliable reading of trend and trend for both the short-term and long-term, so that regardless of whatever stock you type in, such as Signal, where you get bullish trends, or Micron, where you see bearish trends, these are all derived from the moving averages that you would traditionally put on a chart and have to interpret yourself. This does that interpretation for you, so that regardless of what stock you type in, you get a pretty good sense for what the short and long-term trend of that stock is. And the second indicator that we use is a technical score. This is a relative strength ranking so that you understand how strong this stock is compared to the overall market. And it gets scored on a score of 1 to 10. 1 are the weakest stocks in the market, 10 are the strongest stocks in the market. So here at Micron, this helps you quantify where Micron sits in the grand spectrum of the whole market. Micron is a relatively weak stock. As you can see, this is a stock that's taken quite a beating over the last few months. That's why it's got a score of 3, technical score very weak, versus Cigna, the example that we saw before, very strong stock. As you can see, it's outperformed the overall market. That's why it has a score of technical score of 9, which is very strong, and the 1 month and 6 month trends are bullish. So this is designed so that you can type in any stock and instantly get a rough view as to where this stock is trending and what the relative strength of that stock is. And then what we did is we had a lot of important information that we thought was important for options traders is earnings dates, dividend dates, and price action all on one screen so that you understand where those dates are, those important dates, which are really important when you're trading options, all at your fingertips so that you're not going to other sources to find all this information. One of the things that we notice as options traders ourselves is we spent a lot of time clicking between our charting tab, which gave us our directional view and kind of where we thought the stock was going to go. Once we had that directional view, what we did is we spent a lot of time going to the option chains to figure out exactly what strategies to do. And a lot of times, maybe we had to do a lot of back and forth between the charting tab, which gives us our directional view, and then the options tab, and then maybe some other tools to help us analyze the option strategies. We wanted to put all of those things on one screen for you so that you don't have to constantly go back and forth between different tabs in order to find a trade idea. So everything flows from idea to why you should trade it, and more importantly, how should you trade it. Now, for those of you that are already trading stocks or starting out with options trading, one of the biggest limitations of stock trading is that you have the same trade regardless of what your analysis is. Whether you're fundamentally feel that a stock is undervalued, or because you have a technical buy signal, or whatever other reason that you're buying that you're bullish on a stock, there's only one strategy that you can trade, and that's simply buying the stock. So it doesn't matter whether you're bullish on the stock for a day, a month, a year. It doesn't matter if you're bullish on the stock because you think it's going to go up 2% or 20% or 200%. It's the exact same trade. However, with options, you get a lot more flexibility to be able to really maximize your profits based on not only direction, but also magnitude and time. And that's really the flexibility that options gives you, that when you're trading a stock, you don't have that ability to do so. Second of all, when you're trading options, you can take a lot of these directional views with limited risk. So it's really important that if you are using strategies, or if you're trading, limiting your risk is one of the best ways to maximize your profits. And options have this embedded limited risk profile into your option strategy. So what we're going to show you here today is how you can take a directional view and quickly leverage it into a bullish or bearish strategy using options. And then what we're going to do is we're going to cover some income strategies, because many people use options to generate income, such as selling covered calls, cash secured puts. We want to walk you through a few of these scenarios and show you how easy it is to find some strategies, analyze it using OptionsPlay, and make that decision as to which strategy is best suited for you. So I'm going to start off with Cigna as an example here. This is a bullish stock with strong relative strength in a fairly strong sector, healthcare. So here I have two buttons here at the bottom of my screen. I have I'm bullish and I'm bearish. I'm going to click on I'm bullish here because I want to look at 3 bullish strategies on Cigna. So traditionally, if you were bullish on Cigna, you can only buy a stock. Or you can look at an option chain and figure out which call you want to buy. And for those of you that are a bit more advanced, you might look at other strategies like credit spreads or debit spreads. And you basically have to pick some expirations and strike prices first before you can see some analytics. So the way we designed OptionsPlay is all you have to do is select I'm bullish, and we will actually show you some strategies that make sense for a bullish view on Cigna. So we always start with 3 basic strategies. You can buy the stock, you can buy a call option, or you can buy a call spread. These 3 represent the 3 most basic strategies that you can deploy if you're bullish on that stock. For stock traders, you have the stock. For beginners of options, you might look at a simple option strategy like a call option. And then for more advanced strategies, or those of you that have a bit more experience, trading a call vertical. This allows you to take that directional view with limited risk for both of the option strategies. And the most important piece, in my opinion, here is that we allow you to compare the 3 side by side. Something that you can't do when you're looking at an option chain is it's really difficult to compare buying a stock to buying a call, and conversely buying a call to a call spread, or comparing one expiration to another expiration. Really difficult to do that from an option chain. So what we do is, number 1, we give you a starting point so that even if you know nothing about options and you're not sure what expiration, what strike price to start with, we're providing you with some starting points so that you can start exploring and analyzing before you start modifying and fine-tuning each one of these strategies. So here we have 3 strategies. Buying 100 shares costs you $21,000. Buying a call option costs you $860. And buying a call spread costs you $725. And what we wanted to do is present to you a set of tools that allows you to compare and see how these strategies perform, even if you know nothing about these strategies and how they're going to perform or what they do. We created a P&L simulator that allows you to simply ask yourself, Cigna's at 208 right now. I'm bullish on this stock. How far do I think it's going to go? Let's say you think it's going to go up to that 225, 223 prior high, which if I zoom out a little, you'll see that's where some of that prior highs are, around 223, 226. So let's say I think the stock's going to go to 223. How did these strategies perform? If you had bought the stock, you make a 3.7% return. If you bought the call option, you make an 80% return. If you bought this call spread here on the right, you make 113% return. Now that looks pretty good to the upside. If you're correct on the trade and Cigna does move higher, this allows you to actually start comparing the strategies, and instead of guessing which strategy is best for you when you're looking at an option chain, you know definitively which one gives you the highest return exactly for the scenario that you're expecting. But more importantly, especially when we're trading any market, we need to not only look at our potential rewards, we also have to look at our potential risks. So if we buy Cigna, there's always the opportunity or the possibility that this stock drops, right? We've seen some volatility recently. It's not crazy for this stock to go back down to 190, which is just where it was in mid-September. So what happens if the stock goes down to 190? As you can see, when you buy a stock, you get dollar for dollar exposure, which means that you have unlimited risks to the downside. If the stock goes to zero, you will lose everything. Every part of that $21,000 you've paid, you would lose if the stock went to zero. That's not the case if you bought a call option, because as you can see here, if the stock drops to 190, you're losing $2,500 on the stock, so 11% loss. Versus on the call option, because you've only paid $860 for that call, that's the most amount of money you can lose no matter what. So here, as you can see, I only lose $860. So roughly a third of what I'm risking if I had bought the stock. So not only is the stock more expensive, which means that my returns are lower if I'm correct, but I'm also going to lose more money if I'm wrong in this trade and Cigna takes a dump. Versus if I bought the call option, I get a higher return because I'm laying out a lot less capital to get into the trade. But if I'm wrong in this trade, I actually risk less. And for those of you that are a bit more advanced and have traded complex strategies like verticals, you can see even an additional benefit. If you're wrong, you actually lose the least amount of money. So not only do you make the highest return when you're right on the spread here on the right, but you actually also lose the least amount of money when you're wrong. And that's really why this spread here is one of the most efficient ways to take that directional view of an underlying stock while limiting your risk. And that's why this strategy here on the right has the highest OptionsPlay score, because not only do you have the highest return when you're correct on a trade, but you actually lose the least amount of money when you're wrong on this trade. And being successful in trading is really about minimizing risk. The more you can minimize your risk, the more likely you are going to be successful in the long run with trading. So this is really why options is key in being able to help you define your risk regardless of what happens, because we none of us have a crystal ball, and we certainly will use our technical and fundamental analysis skills to give us an idea of what is likely going to happen. But at the end of the day, we always have to prepare for the worst case scenario, and options really allow us to minimize our risk in that worst case scenario. So this is really how you can take our tool, type in any stock, being able to click on either I'm bullish on the stock and present you 3 bullish strategies on how to take advantage. If you think Micron is sold off significantly, but you think it's a little oversold and you think it could bounce higher, click on I'm bullish and be presented with 3 bullish strategies. Or say that I think this trend's going to continue, show me some 3 bearish strategies on Micron. For those of you that follow tech, this is probably a name that many of you are familiar with. As you can see, this stock is really starting to fall apart here. We're continuing to fall apart. So one of the great things about options is that when you're trading stocks only, and you're bearish on a stock, many of you may not be able to short a stock because you have to pay interest margin on it. You need to have a margin account. You need to be able to borrow those shares from someone. There's a lot of limitations that prevent you from shorting the stock. But you can buy a put option fairly easily on a stock. And that's really why if you're bearish on a stock, put options really essentially double the amount of trading opportunities that you have, because when you're a stock trader, you're only looking for bullish opportunities. When you're an option trader, you can look for bullish opportunities, bearish opportunities, even neutral opportunities. So you're really expanding the amount of trades that you can make, or the amount of opportunities you can try to take advantage of when you utilize options. So let's take a look at a bearish example here. So Micron's trading at 39.76. I clicked on I'm bearish, which now means that I can short the stock, I can buy a put option, or I can buy a put spread. On one of them, I'm risking unlimited amounts of money, because when you short a stock, you truly have unlimited risk if the stock takes off. Buying a put option gives you limited risk to take that same directional view. So instead of posting thousands of dollars in margin to short a stock, I can pay $227 to buy a put option, or $167 to buy a put spread. So Micron's trading at 39.76. I think conservatively, this thing could probably go to 36, maybe let's just say 36 on a conservative basis. Here, as you can see, if the stock goes down to 36, if you had shorted the stock, you do make a nice 9% return. But keep in mind that to make that 9% return, you have to borrow that stock, you have to pay interest margin, and you have unlimited risk on the downside if you're wrong. Versus buying a put option gives you a 76% return, or 140% return if you buy the spread. So immediately you can see the benefit of potentially moving to the spread trade. So especially if you're a beginner of options trading and you're learning about this, you want to get yourself to learning about spreads and complex options quickly, because look at the difference in returns if you're right, versus just buying an outright put versus buying a put spread, which is just buying this put here. As you can see, the November 30-40 strike put. Well, on a vertical, what we're doing is we're buying that same $40 put, but we're selling a 35 put against that. And that's really how we're able to lower the cost of that trade, lower our break even, and effectively almost double our return by decreasing the cost of our trade by about $50 or so. So as you can see, if I'm right on this trade, if Micron goes down to 36, I make a nice 140% return on the spread. But conversely, I'm always cognizant of the fact that I could be wrong, and maybe Micron does really well on earnings and shoots up to 48, or which is the prior resistance where it was just a few days ago, on October 2nd. As you can see here, if I shorted stock, I lose $830, a large portion of the amount of money that I'm paying to short the stock. Versus if I bought a put option, I only lose $227, so a quarter of what I'm risking here, versus $167 if I bought the put spread. So maybe about a fifth of the risk. So not only do I make a significantly higher return if I'm right on the spread, but I risk the least amount of money, a fraction of what I'm risking if I had just shorted that stock. And that is the huge benefit, especially if you're looking at any bearish strategies. You really should be utilizing options to take that directional view, because in the case that you're wrong, you're going to be able to limit your risk, which means that you're going to have more dry powder to make your next trade, even if you're wrong on this trade. So really important to make sure that you utilize these strategies, especially if you're bullish or bearish on an underlying stock. Being able to compare buying a stock to buying a call, or shorting a stock to buying a put, is really the start of being able to explore options and to use it as an alternative to simply buying a stock or shorting a stock. Now, I do want to point out that right now I've been looking at some pretty big names. These are all fairly liquid, large cap names. When you're using some of these comparisons on smaller mid cap companies or even small cap companies, sometimes you might find that you actually get a lower return from the option. This is really designed to help you learn as a trader. Not every time that you set up these types of trades is the option trade going to be better than the stock trade. There are going to be cases, especially in the smaller cap names, where you're just better off trading the stock. And this is really what the tool is designed to do. Help you put the three different strategies side by side and see which one's best suited for you. We're not saying that the option is always best. Sometimes it's not best. So make sure that you utilize this tool and compare them in order to see which one's best suited for you. So next, that's a quick use of how you can utilize this tool to trade, meaning if you have a directional view on a stock, how you can utilize options to leverage that directional view while limiting your risk. But many of you are using options to generate income. The single most popular use of options trading is to generate income. So what I want to do is I want to spend a few minutes to show you, taking a look at the stocks that you own in your account, how can you utilize options to generate some yield? And for that, I'm going to turn to the income tab. So this is the tab that's designed to do the exact same thing that the trading tab does, but it finds you strategies to generate income either on the stocks that you own in your account or stocks that you want to own in your account. So the two strategies I'm going to cover here is a covered call. So this is for those of you that own some stock and you want to sell some calls against that to generate income. A covered call is a strategy for you. For those of you that don't own some stock, but you want to enter that stock, you should take a look at shorting puts as opposed to outright buying the stock as an alternative to generating some income while still trying to pick up some of those shares. So what I'm going to do is I'm going to go over to, let's say, Apple. And the reason I'm pulling Apple is simply because I would imagine that most of you probably own some Apple shares in your account. So I want to look at two strategies. How can you sell some covered calls to generate if you own Apple, or how can you short some puts if you want to own Apple? So first off, I want to show you the income settings button, which is at the bottom of your income tab. This is designed to allow you to set your own personalized settings for covered calls. So how far out do you like to sell your covered calls, short, medium, or long term? And then your risk tolerance, conservative, aggressive, or optimal. So I have mine set to short-term optimal because when I'm selling options, I trade fairly frequently, so I sell shorter dated options. My risk tolerance is fairly not too aggressive, not too conservative, so I fall in the middle category. But for puts, I like to be a bit more aggressive because I want to chase some yield on when I'm selling some puts, and I want to own that stock. So I'm a little bit more aggressive when I'm selling puts. So you can set your own settings, click on Save as Default, and all the cover calls and short puts we present to you are based on your personalized settings. So this is very similar to going through the option chain and looking for the 30-day option, typing in the symbol, looking for the 30-day option, figuring out which cover call to sell, but doing that all on an automated basis so that you don't have to waste your time going through pages and pages of option chains. All you have to do is type in the symbol that you own, and we will present to you the cover call and short put that matches your criteria. So here's IBM's trading at 130. I can click on yes, I own, let's say, 200 shares of IBM. I can even type in my cost basis, and it immediately tells me which cover calls to sell, which means that I don't have to pull up my option chain, go through all the different expirations, all the different strike prices. It immediately tells me to look at selling the October 16th, 136 cover calls. So this is a call that's roughly $6 above the current price that expires in about 25 days. And this gives me a 7.07% annualized yield, which on a stock that pays a very hefty 4.8% dividend. So if you own IBM, you're getting paid a really nice dividend, almost 5%. But by adding this covered call, you're going to add an additional 7% yield to that. This is really useful for those of you that have some stock in your account and you want to generate some additional income. Perhaps the dividend yields that you're getting currently is not enough, especially S&P 500 dividend yields are relatively low from a historical perspective. So this gives you a total yield of almost 12%. So from about 5%, you're increasing it to almost 12% by adding covered calls. Conversely, if you don't own IBM and you want to own IBM, this is telling you to look at selling a November 16th, 126 put. This is, again, for those of you that want to own the stock, because what this does is it reduces your cost basis by about 1.36% over the next 25 days. So imagine being able to buy the stock for 1.3% cheaper than where it is 25 days from now. That's really the benefit of potentially selling a put, is generating that income, $177 for every 100 shares that you want to buy, which again offsets about a 1.36% over the next 25 days. And if the stock doesn't go below 126 by now and expiration, you're going to collect 177, and you can do it again on November 16th over and over again until you end up owning that stock. And this is designed so that you can type in any stock, especially for the tech stocks that are not paying any dividends today. This is one way to extract some yield out of those stocks. So Facebook, if you own Facebook, there's no dividends. You can earn 1% of the underlying over the next 25 days. That annualizes out to 16% throughout the year. So if you can reduce your cost basis of Facebook stock by 16% over the year, is that something you'd be interested in? I think certainly for most people that are looking for income, this is something that's attractive to take a look at using these types of numbers to generate some yield. And for those of you that are looking to pick up Facebook, you can use sell or put as an alternative to outright buying the stock at the current price. But you can type in any stock and within a few seconds, look at which cover call and which short put makes sense. This is so that you don't have to spend a lot of time searching through option chains, pages and pages of this to find that optimal starting point for you, regardless of what your views are for the underlying stock. And as you can see, I can go through a list of stocks that I own and within a couple of seconds know exactly where my cover call and short put opportunities are. Click on any stock and within 2 seconds know exactly what my starting points is. And this is really designed for those of you that sell a lot of cover calls or sell a lot of puts to make your research time down from a few minutes down to just a few seconds, really saving you time from doing that manual work of searching through option chains every single time you want to sell a cover call, which makes the whole process just as easy and as efficient as possible. So with that, what I want to do is I just want to jump back to the trading tab. And what I just want to show for those of you that have some experience trading options, who want to look at alternative strategies, or if you want to look at different expirations and strike prices, I just want to show you the flexibility of this platform for all different types of strategies. So I'm going to go back to Signal real quick. Let's say I'm bullish on Signal, but maybe you're not as bullish as, you don't think it's going to go up to 225 like we were talking before, but you think it might move up a little. So some of you that are a bit more, that have some experience trading options, you know that there are other strategies that you can take other than just buying a call or a call spread. You might want to look at alternative bullish strategies. So that's where our strategy constructor, you can click on modify for any strategy and use our strategy constructor to construct any of the more advanced strategies that we have. So if you want to short a put vertical, so if you want to sell a credit spread, you can do that just by moving all the strikes up and down one using our strike selector, or you can make the spread wider or narrower just by the click of a mouse. And this is really designed to help you navigate the whole chain without constantly having to click on every single. So let's say if you wanted to sell this credit spread, if you wanted to sell this credit spread and you decided, no, that's not the right one, you have to do quite a bit of clicking to find the next one. See, look at how many clicks that I have to do to figure out moving just one strike up or one strike down. OptionsPlay allows you to move both strikes just by the click of a mouse. So you move all the strikes up one, down one. If you want to make it wider or narrower, all by the click of a mouse. So really helping you navigate the whole chain without having to utilize the option chain. You can change the expiration dates. You can change the strike prices. And even on our strike drop-down menu, we have the premiums of each one, as well as marking off where the one standard deviation move is, so that you have roughly a guess or a sense of where the one standard deviation moves are. Usually very important for those of you that like to sell options. You can always click on modify, use neutral strategies like butterflies and condors. For those of you that are looking for more advanced strategies, you can use this tool to price it either by bid ask or mid price. So there's a lot of flexibility into how you can utilize this tool to trade more advanced strategies, modify each strategy if you want to change the expiration dates just by the click of a mouse, and really play around with not just the standard strategies that we have, but all types of strategies that you want to deploy. So that if you want to compare selling an iron condor to just selling put vertical, you can do that side by side and use our P&L simulator and say, what happens if the stock stays exactly where it is? What is my expected profit? And what if I'm wrong in this trade? How much loss do I have? So as you can see on the iron condor here, if the stock really goes down, I'm risking roughly the same amount of money. But if it stays where it is, I'm making double the amount of money on the iron condor as I do on the put vertical. So maybe I might want to look at that iron condor and sort of that put vertical. This is really the type of analysis that really allows you to be flexible in trying out all different types of strategies, putting them side by side, using the P&L simulator, which is the most powerful tool that we offer to help you understand how each one of these strategies perform, regardless of what your views are on the underlying stock, and instantly being able to see and compare strategies side by side and see which one gives you the best reward, but also on the same token, which one gives you the least amount of risk, if possible, on the downside or in the case that you're wrong. So with that, that's just a very quick overview of what we offer here. And lastly, what I just want to show you guys is if you are ever concerned about or have what's currently going on with the trade, click on the guide button, and that allows you to create all of these little flags so that if you don't know what something means, you just highlight this and it will explain to you what each one of these panels mean so that you have a better understanding of what you're seeing on your platform. So clicking on the guide button allows you to do that. And lastly, once you're ready to place a trade, if let's say this is the iron condor or vertical that you want to trade, one of the coolest things that we've done with the Regal integration is when you hit the trade button, we have a preview order button that will actually pre-fill the ticket for you. So regardless of what your trade is, once you view it in OptionsPlay and you're ready to execute it, hit the trade button, hit preview order, and everything will be pre-filled for you so that you don't have to enter anything manually. You can do this all by the click of a mouse, and all you have to do is select the order type and send it off for execution. And this is designed to make your life as simple and as seamless as possible. So if you're viewing a trade in OptionsPlay and you're ready to execute it, just hit the trade button and you'll be able to trade that trade immediately through OptionsPlay into your trading account at Regal Securities. So with that, I just want to thank everyone for taking the time out this afternoon. At this point, what I'll do is I will open this up for question and answers. So please, if you have any questions, type them into the chat window. This webinar is recorded so that you can watch the webinar recording after. And again, just to summarize, this platform is really designed to try to make your options trading as intuitive, as easy as possible, and more importantly, giving you the tools so that you can see strategies side by side, play around with them, modify them, change the expiration and strike prices, and see how they affect your outlook and how they perform in any given market so that you are confident in the option trades you make and not guessing yourself as to how much money you will make or how much money you will risk if you're right or if you're wrong. So with that, please, if you have any questions, please type them into the chat window and I will answer as many questions as I have time for. So William's asking, is there any way to chart option prices in eOption? So unfortunately, there is not. Historical options is not something that most places have, unfortunately, so that's not something that we currently do at this time. What if you wanted to look at a bullish put vertical? I think I just covered that, right? So you have our strategy constructor. I clicked on bullish and I did a short put vertical, which is exactly what you would ask for. And like I said, you can use our tools to change the width of that vertical spread, move the strikes up one, move the strikes down one, all with the click of a mouse to really allow you to play around with these strategies, change the strike prices, and see how they perform. Is this a standalone product or an eOption product? This is a standalone product that's being embedded into your eOption platform. So you can, this is free of charge to you as an eOption customer. So for those of you that are on a practice account or a paper trading account, signing up for the live account will allow you to access this tool free of charge. Does OptionsPlay track calendar spreads? So I don't know what you mean by track, but you can certainly look at calendar spreads. So we have both calendars and butterflies all here in your tool. So any strategy or any four-leg trade that you can possibly think of, you can create, or you can even custom create your strategy. So you can add whatever 4 legs that you want to add together, you can use OptionsPlay for to try out, test, and see if you can trade. Randy, the demo is on paper trading that eOption. Can I use a paper trading account to play around with this? So again, this tool is only available free of charge to live trading customers. So if you have a paper trading account, all you have to do is open up a live account and you'll be able to see this tool that we're showing you here today. Is this being recorded? Yes, it is being recorded and will be available in the archives. Steve's asking, does OptionsPlay look at volume and open interest? So we do not look at volume and open interest because open interest and ing typically, I'm guessing you're asking this question because you're concerned about liquidity, which is an absolutely thing that you should be looking at, but we don't believe that volume and open interest is a good gauge for liquidity. The reason for this is because, I'm just gonna reset some of these trades, is because open interest and volume is really just sheer luck whether someone else is trading that. It has nothing to do with liquidity. Now, what that means is that things that are very liquid typically have high interest and high open interest and volume, but something with low interest, low volume or low open interest does not mean that it's not liquid. So that's really where I think people misuse open interest and volume a lot of times. So when we look at liquidity, we look at the spread between the bid price and the ask price to give you an idea of liquidity. So this is trading at 820 by 860. From a percentage standpoint, that's only a 20-cent spread between the mid price and the ask price on an $8 option. That's a pretty liquid name. So that's why on spread and liquidity, we give this good liquidity. That's why it's got a green check mark. This could be trading at low open interest or volume, but that really has nothing to do with how liquid something is. So we use the bid-ask spread to give you a better sense of liquidity. Great question. If you have a library of these videos, can you give me a link? Yeah, so Scott, if you don't mind sending the link to everyone in the chat window to all of our previously recorded webinars and where this recording will be, that'd be great.
Yeah, I'll send that now.
Kudos to your team. Thank you very much. I really appreciate this. How to minimize loss if you're reading on stock M changes. I'm not sure what you mean by that. I'm not sure what stock M changes are, but minimizing losses is really about trading options. Options have an embedded max risk because what you paid for that option is the most amount that you can risk. So if you're bullish on Cigna here, it doesn't matter if the stock goes to zero. You're only losing $840 per contract. Versus if you had bought the stock, you'd lose $21,000 if this stock went to zero. Now, chances are the stock's not going to go to zero between now and expiration, but I do think that it's possible if the stock goes to 190. And if that happens, you're losing $2,500 on the stock versus only $840 on the spread. So that's how we minimize our risk or our losses is by trading options, not stocks. How often do your reading changes? Great question. So this trend indicator, if that's what you're referring to, changes once a day. Every single time the daily candle gets pushed out one, that's when those trends can change. On my account, I have to type the first few letters of the stock name instead of the ticker. When I type in the ticker, nothing happens. I'm not sure what you mean because as you can see, I can type in the ticker here like AT&T and it brings up AT&T. If you're seeing something different, please contact your support staff. We can certainly give you an idea. The question here is, what makes the trend change? Well, the trend makes the trend change. So if the stock goes above a moving average, it can change from bullish to bearish or vice versa. And we use a triple moving average to give you not only one single trend change, but multiple trend changes very quickly. Do you have to deposit funds while opening a live account before we can see the OptionsPlay tab? That's actually a really great question, and that's a question for your customer support representative to answer that question for you. Can you obtain the volatility ranking in OptionsPlay? So we purposely do not publish the volatility ranking because we find that volatility actually has a relatively low impact on your P&L compared to some other factors like delta. And that's really why we don't publish the volatility rankings. We believe, and for those of you that are interested in this type of strategy, a lot of people will use volatility ranking to decide whether they should trade a credit spread or debit spread. We find that based on our research that that's not a good way to decide whether you trade a credit or debit. However, I don't quite have enough time to get into those details, so please look at the webinar recording link that Scott just posted in the chat window. We have a specific webinar on this topic, debit versus credit spreads. We really get into the nitty-gritty of each one of these strategies and when you should utilize those strategies. And it really depends on where you feel the stock's going to go. It really should not be driven off of volatility ranks. Volatility ranks, as you can see here, just so you can see, if let's say we're a few days before expiration, volatility has a relatively low impact on your P&L. As you can see, if the stock even changes by 3 vol, you're looking at just a few percentage points in P&L in change versus if the stock even moves a couple of dollars. As you can see, there's a huge impact to your P&L, which is why delta is the largest exposure you have on any of these things. That's really what should be influencing what strategy you trade not the implied volatility. Is the double green lines across the stock chart represent support line of the stock? Yes. So support lines are represented by green lines. Resistance lines are represented by red lines. Have you received feedback on live traders that use the software strategies versus their own strategies? If so, what has that feedback been? Why don't you send me an email at info@optionsplay.com, because that's a bit more involved in terms of that question. I'm happy to answer, try to understand what type of strategy you're referring to, and I can certainly give you some of that feedback. For live accounts, do you pay any interest on cash in the account? So that's, again, a question for your account representative at Regal Securities. I'm sure they'd be happy to offer you those rates. Any other questions regarding the tool itself? What are the two rows of red, yellow, and green bars below the price chart? Great question. So the question is kind of, what are all these green and red bars below the chart? That's really telling you how this trend indicator that you see up top has changed over time. So I can tell you that AT&T is in a bearish trend, and I can tell you it's been in that bearish trend since October 10th. So as you can see, before the stock really sold off, this trend started to turn bearish on October 10th. So I can tell you that this stock has been bearish for the last 6 or 7 trading days. And that's really why we created this trend indicator, so that not only can you see what the current trend is, but how that's changed over time. And as you can see, once the stock moves a little higher here on September 6th, that's when the 6-month trend turned neutral. And on September 11th here, that's when both the 1-month and 6-month trend turned bullish. And the stock continued to move higher until it turned again or reversed on October 10th. So this really tells you how something has changed over time. Any other questions? If there are no other questions, I just want to thank everyone for taking the time out this afternoon. I hope you guys find this webinar useful and giving you a better understanding as to how this tool can be used for helping you find option strategies, especially for those of you that are brand new. This is really designed to give you a better starting point than simply looking at the option chains, which many times can just feel like someone's throwing a phone book at you and telling you to figure it out yourself. This is designed so that you have a starting point based on what your views are, provides you with some insights into whether you should be looking at perhaps bullish and bearish views to begin with, and then see different strategies and see how they perform. And that's really the key for beginners, is understanding your risk before you get into a trade, so that you know how much money you can make if you're right, how much money you can lose if you're wrong, and being prepared for that so that things don't scare you or things don't surprise you after you get into a trade. This is information that you need to trade options before you get into it. And we want to make sure you have all that information before you get into that trade, so that nothing surprises you and nothing comes as a shock. So I hope you guys find this useful. And for those of you that have traded options before, this is really designed to save you time. Save you time from figuring out where to start, save you time from comparing different strategies, and really, automating the process of looking for the same strikes over and over again when you're doing systematic strategies like selling cover calls and cash secured puts, never having to pull up that chain again in order to find your starting point. So I want to thank everyone at Regal Securities for having me here, and I hope everyone has a great afternoon.
Yes, and thank you, Tony. Great stuff as always. And thank you to everyone who attended and registered, and for all the great questions too. The more questions, the better. Really helps everyone learn about this great tool. And if you haven't been using OptionsPlay, we encourage you to test it out. Don't hesitate to give us a call here at eOption, or send us an email if you have any questions. And if you don't have a live trading account yet, go ahead and sign up for one, and you'll have access to OptionsPlay, and highly encouraged for all option traders. Our next OptionsPlay webinar will be on Monday, November 5th, so be on the lookout for that email invite. We usually do them at the same time, 3:15 Central Standard Time, again with Tony Zhang. So be on the lookout for that email and topic. And thank you all again once again for joining us. And if you have any questions, please don't hesitate to contact us. Thank you. Have a great rest of the day.